Okay, we start off this video using wage bracket method tables for manual payroll systems with forms W-4 from 2020 or later. This is the most current wage bracket method used at the moment. However, the IRS has been stipulating that it's possible that a person could still have a 2019 W-4. And you may have to use that wage bracket method that we've discussed already, the pre-2020 method. The interesting thing here about this form, about the IRS, about the 2019 W-4 is, in theory, you don't require your employees to change their W-4 unless they need to. And you don't dictate when they change their W-4 form. You may become aware that an employee gets married or has a child. You may even mention to the employee that perhaps they would want to consider changing their W-4. But by law, you're not allowed to assist an employee in filling out the W-4 form. Although it's gotten more complex than ever, and it will probably be required to some extent on your part. Okay, so this new method uses a different set of tables than the previous wage bracket method. We need to be aware of what the periodicity of our payroll is. Monthly's 12, weekly's 52, semi-monthly, bi-weekly, these are common. Daily's only common in the temporary employment agencies. This is the worksheet, and you may get very good at this. But first off, you need to determine, is this employee got a wage low enough to fit on the wage bracket method? So we'll see that here in a minute. And if they are eligible for the wage bracket method, you'll want to use it because it's going to be the easier method to use than the percentage method for W-4s after 2020. This worksheet is actually the worksheet that you will use, and this will be the amount of tax that you will withhold from that paycheck. So you can see, doing payroll manually, you might do this for 1 or 2 employees, but you'd have to do this every payday unless they have a set paycheck, right? Okay, so what I've done is I have prepared a worksheet that mimics that worksheet on that publication on the wage bracket method. So let's take a look at some examples. Let's look, first I want to show you something. The key here as to what table, once we get into the table, there's a left and a right side for each filing status, either single, married, filing jointly, or qualifying widower, or head of household. And what will dictate whether you use the left side or the right side is this box right here. Now you may have caught this in chapter 1, but now it becomes critical. If they check this box, meaning that they have more than one job to account for, then they'll check that box. Read these line items very carefully. They explain why a person might check this box. Then we've got steps 3 and 4. 3 is where we're going to capture our allowances. So if we have qualifying children, we'll put 2,000 times the number of qualifying children here. And if we have other dependents like an elderly parent or grandparent, we would put 500 times those qualified dependents here and total up line 3. Okay, so let's take a look at some examples. And let's go ahead and use the worksheet because it just does the math for us. And we can walk through it systematically. So the first thing we need to do is determine what the taxable wages are for our first employee. Our first employee is James Rawls, files single. So we might want to just make some notes, kind of helpful. So let's just write some notes down here. So he is single. Doesn't look like he has any dependents, but let's go just read line items. So he's paid weekly. So we got 52 periods. Gross pay is $792. For each period, he makes a 401 contribution of 3%. So we want to subtract out 3%. So we might times that by 0.97. That's how much is going to be taxable. 768.24. Let's read a little further. It says James checked box 2C, so that box is checked. We will want to use a particular side of that table on Form W-4 and did not enter any information in 3 or 4, so we won't bother with that. So truly, this individual is single, no children, no dependents, paid weekly, and the weekly pay for this week is $768.24. So let's go to our worksheet. Enter 768.24 and 52 pay periods for the year, weekly. It says enter the amount from steps 4A. There was no entries from 4. There were no entries, line items 1A and D. If we can take a look at them over here. I'm sorry. This worksheet refers to the ones A's, D's through F through here. So we don't have anything there. It automatically does the math for you here. There's nothing there to add. It goes add lines 1A and D, get 768.24. So the adjusted wage amount is 768.24. The next step is to use the tables in such a way that we find the amount of tax to withhold at this point. So if you go to this table that I provided you, which I think is easier than using your textbook and flipping back and forth, we go down here and we're going to look for weekly payroll. And specifically, we're going to look at single, and specifically this line here where it says Form W2 or W4, Step 2, checkbox withholding. So the checkbox has been marked. So what we need to do is we need to look for 768 on this bracket to see where it falls. Similar to the other bracket method, just find where it falls. And we see 768 falls in this first line here. Come all the way across and we see that the taxes for this individual is 102. Go back, put 102 here. And since there's nothing else to add, there's no amount of allowances for dependent children, and there's no allowances for other dependents, then this is the amount of tax that we withhold using this method. Let's do another one. Okay, so now we have Louise Ames files married filing jointly. Paid weekly, so it's 52 periods. Gross pay is $14.20. She does not make any retirement contributions, so this is also her taxable income. However, Louise entered 3,600 on line 4B of Form W-4 and did not enter any information on steps 2 and 3 of the form. Okay. And since it did not mention that box 2 was checked, we can say that box 2 was not checked in this situation. So her taxable wages is $1,420. 52 periods. The only thing different here with her is that she put 3,600 on enter the amount from step 4B of the employee's withholding. So let's look at that, step 4B. That's the deductions. If you expect to claim deductions other than the standard deduction and want to reduce your withholding, use the deduction worksheet on page 3 and enter the result here. So she entered 3,600 there. That would indicate to me that she has some other income to claim and wants to capture that in her taxes from her regular paychecks from this current job that she has. So enter the number from step B, 14 or 3,600. And go ahead and let these numbers cast on out there. And then what you get on a 1H is the taxable wages. Notice she gets $1,420 over 52 weeks. That 3,600 is then spread over that 52 weeks. And that's the way I believe it's done. 1350.77, so we use our wage bracket table. Again, it's weekly, and you're going to be careful because if it's anything other than weekly, you've got to go way down on these tables. Sorry, way down on these tables like this. So again, we're at weekly. And the taxable wages are 1350.77. We look for 1350. And come across. Okay, at this point, we're looking for married filing jointly, which is these two lines. And in this case, she's going to use this line right here, which is just standard withholding, since the checkbox step 2 checkbox was not checked. So back down here, 1350. The amount to be deducted from her paycheck is $98. We go back out here and we can complete this by putting 98 here. Nothing else changes, so 98 is the amount that we withhold. Okay, let's do one more. Don't think it gets any more difficult, but let's just give it a try and talk a little bit about some of the complexities. So Danielle is married filing jointly. She's got 52 periods because she's being paid weekly. Watch to make sure that that doesn't change on you to biweekly or semi-monthly. Gross pay is $1,580. For each period, she makes a flexible spending account contribution of 6%. So we can multiply this by 0.94 to get the taxable wages. Taxable wages then are $1,485. Also be careful about what they put here for the deductions. Sometimes it's not tax deductible. And sometimes, most of the cases, it is for federal income tax. Zoe entered $500 on step 3 of Form W-4. Okay, that $500 most likely is for a dependent other than a child and did not enter any information on steps 2 and 4, and the checkbox was not checked. So we move to our table at this point. So our taxable wages are $1485.20. $52 periods. We're using the weekly table. Now at this point, it says that she entered 500 on this spot right here. So that's step 3. Could have put some here for children, but here is just 500. So step 3 is 500. Let's go back to our table or our grid sheet. And that 300 is, or that 500 is going to go right here under step 3. All right, now we got to drop back. We didn't actually have to do that. We could have went in order. We need to find out what the tax deduction is for $1485.20. So again, we use the same table, and she's married filing jointly, and it's a standard withholding. So we're looking for $1485.20. We're very close. $1485.20 falls in between this one here, and we see that the amount of taxes to withhold is $113. Come back here, put in the 113. However, once we've entered that 113, it says in order to compensate for that extra 500, I guess, we have to withhold $103.38. Okay, so this is the amount that we'll actually withhold. Figure the final amount to withhold, $103.38. Okay, that's it. That's the bracket method using the new W-4 form.